Good morning, this is Jason Sen. It is Friday the 11th of October. Just to look at the markets as we round up this week. This is the chart, daily chart of the dollar yen. This week on our reports we predicted a bounce off the 200-day moving average, which has worked perfectly. We've had a really good run up. We've broken through some trend lines, as you can see on the chart. We've hit the 100-day moving average at around 98.55. Yesterday we did say that would probably cap the move. Indeed it has. There's good Fibonacci resistance level there as well, which is why we see an end to it. We're overbought short term, so all in all that's telling us we're probably going to head lower. 97.80 area is looking like decent support and probably a realistic target. It's some Fibonacci area, and there's some short-term trend line support there as well. So just to look out for that sort of 97.80, maybe even 97.60 area today. Staying with Forex, this is cable, pound versus the dollar. We did expect to move lower last week. We went on and on about this, and it did happen. Our target is 159.20. We saw that this week, and indeed we've bottomed out almost exactly here as we had expected we would. As you can see, it's a big fib support level. It's also trendline support. We've managed a good bounce off there. We could possibly continue a little bit higher. Just look at the short-term chart. 4-hour chart, you can see we've reached the first target of 159.90. We are struggling there, but we could break higher today, and we could even get as high as the mid 160s, I think. But I think that's probably as far as we'll go at this stage. Probably see a bit of profit taking, and if we're lucky, we might get another chance to buy it in the low 159 area. The euro, not quite so interesting. We did come down to this trend line and moving average support during the week, which is around the 134.85 area, and we did really expect that to hold, and it has. But direction wise, there's nothing really exciting to say here. We seem to be just drifting. There's nothing definite. There's no particular trend or anything to get excited about, really. So far we're holding this short-term fib level of 135.45. There is room for us to push higher to 135.65 and even 135.85, but I would suggest we could probably top out around the 135.85 area if we happen to get that far. Gold, I've been bearish for a long time. I remain bearish. Doesn't look positive. We're in a downtrend. I'll just try and blow this daily chart up a little bit so you can see it. Each time we've tried to rally, we've hit trend lines and moving averages and Fibonacci's, and we've sold off again. I don't see any reason why this won't continue. Short-term chart isn't saying anything other than we're in a downtrend, so I think you just stick to selling rallies. The only thing I can say is if we do manage to break above sort of 135.25, 1325, 1330 area, which is Fibonacci and 100-day moving average resistance, then I'd have to start thinking about potential move higher. But until we do that, I remain bearish of gold. Stock markets burst high yesterday. This is the E-mini S&P. You see we hit our 1640 target. We had 1640, 1636 as our target and support during the week. We predicted this would be the end of the 3-week correction, and it does appear to have been so. This was also a weekly fib support area, which is why we picked that. Anyway, we've rocketed higher. We're back up through the 100-day moving average, which is at 1658. We are hitting some fib resistance around 1688. We could stretch as far as 1693 today, but we're getting a little bit overcooked short term, so possibly a little bit of a pullback, but things are positive. This is a longer term uptrend, so you can't fight that at the moment. Just be aware that there may just be the makings of a head and shoulders here. Very, very early days. It's something we're going to have to keep an eye on in the days and weeks to come. But at this stage, way too early to call that. This is the short-term chart, so you can see we burst through any resistance. 1693 is a 61.8% retracement resistance, so that might just cap it in the short term as we get overbought on the short term, and then we might be able to get some sort of buying opportunity if we dip into the low 1670s area, perhaps next week. I'm just going to finish off with the German Bund. Actually, I'm going to show you the daily chart. We're in a downtrend in the Bund. We have been for many months. We managed a little bounce up through middle of September and into October. We did expect this to top out around Fibonacci and trendline resistance up here. It has done so. Finally, it broke lower yesterday, and I think this is the start of a move of the resumption of the longer term, several month downtrend. We're getting a little bit oversold short term, so we